Yeah, well, I'm here to talk about a paper I'm working on that was commissioned by Sim to write. And really, it is looking at the future of trading currency and measurement. And really, I spent a lot of time in the last couple of months thinking about this very issue in ways that maybe I hadn't before, in a level of depth I hadn't before. Basically, if you don't have a view about the future of the industry, you can't start to have a view about the future of trading currency and measurement. Because at the end of the day, and this was one of the best lines that came from some of the interviews we did, was that currency is just a consequence of trading. So if you don't have a view about how trading evolves, you can't have a view of currency evolving. But you can't have a view about how currency evolves unless you have a view about how the industry evolves, how markets are going to evolve their planning, et cetera, et cetera. I don't have great answers or specific answers, because if you're looking at 10 years and you're trying to understand how the world evolves, you can create scenarios, you can anticipate possible outcomes, but it's hard to be definitive about how all these things emerge, other than to say there's a lot of incrementalism at minimum.
So what about companies that are emerging in the currency space? There's a lot happening. Is there going to be a shakeout? What's going to happen to Nielsen? Is there going to be sort of dominant voices, or is it sort of what does the landscape look like?
Yeah, well, I've certainly followed Nielsen very closely for a long time as an analyst. I covered the stock. Was close to following Comscore, and that I was in Portland. They were in Portland, at least as Rentrak, and so looking at where that measurement business was and where it's going, there's definitely room for a lot of the emerging competitors. The real question is whether or not the capital is sufficient to, make sure that they can be vibrant competitors. Is there Are their expectations for how their business is going to evolve consistent with what their investors' expectations are? It's really hard to anticipate radical change when it comes to measurement. That's been a point I've certainly observed going back many years and looking at Nielsen. There's a lot of reasons why it remains a very dominant incumbent. But because the needs for measurement continue to evolve, the possibilities continue to evolve. There's definitely room for competitors, assuming that they're appropriately capitalized and their expectations for what their financials will look like are reasonably well managed.
Brian, a lot of changes in the television industry in terms of the programmers, streamers. You've sort of witnessed a lot of changes in terms of valuations and mergers and issues around carriage and around the investment in streaming. What's going on with the TV industry in terms of the major players, the programmers?
Yeah, well, I think that most of the largest TV network owners are not in a great place. It's amusing, or would be amusing if it wasn't sad. I go back to things that I wrote in 2018 when I was still an analyst, or even 2019, early 2019 when I started at Group M. And I published some things talking about how streaming obviously is the future, but I don't know that everyone is appropriately accounting for how margin eroding it all will be. This is one of the reasons why, when I was an analyst covering Disney, I said they'll more likely be around 50 years from now than any other network. But it's a sell recommendation at the time because I don't think anyone's accounting for all the negatives that are going to hit the business. It's way more expensive to market. It's way more expensive to deliver the content. You have way more churn. Not to mention whatever would happen to the pay TV ecosystem and all the forced bundles that existed. Well, here we are now in a world where consumers don't need to take forced bundles. You can subscribe effectively a la carte to different streaming services. Don't like the programming this month? Cancel it. Easy. The unfortunate thing then for the network owners is that you have falling revenues from subscriptions. You can make up some of it with your streaming services, but not all of it. Advertising is not going to go up anytime soon because creative destruction effectively of the economy means that you have new marketers who emerge and evolve in the economy who maybe don't do the things that older TV advertisers do. They don't need television like older advertisers do. So that's not a positive thing. And costs are only higher and higher and higher and higher. Now, the industry is resilient. It's going to continue to live. It will continue to do okay. But in some cases, especially network owners that are overly levered, have a lot of debt, high interest expenses, not the best of positions. And so you wouldn't be surprised to see some consolidation in the sector. Could also be that there's consolidation across sectors because you may have some digital companies who realize they're not going to be able to grow as fast as they'd like to grow. And all of this goes back to the points I was making earlier about you can't really anticipate how trading, currency, and measurement will evolve unless you have some clarity around how the industry will evolve and how marketers' planning orientations will evolve. This is all dependent on the industry evolving too.